Bitcoin has been chopping and consolidating for months now. But according to this data point, which BTC has been following near perfectly this entire cycle, that could be about to change. So we'll get straight into it here on the global M2 versus BTC chart we have here on BitcoinMagazinePro.com. Now, this has been one of the most followed metrics this entire Bitcoin bull market, with everyone closely following where liquidity is going, how much expansion or contraction we're seeing in global balance sheets, and how this is likely to trickle down and impact the BTC price action. And as we can see, just immediately looking at this chart, as the global M2 money supply is contracting, we usually see the Bitcoin price action struggling. And on the contrary, when this is massively expanding, we typically see Bitcoin really rallying hard. And this has been true for pretty much the entire history of Bitcoin. Now, what we can do is if we just zoom right in on the current cycle, we can see just especially over the past few months, we've seen the global M2 money supply kind of chopping and consolidate alongside Bitcoin's pretty stagnant price action. We can see after we made a new all-time high around $123,000, $124,000, we've actually seen a little bit of contraction in this global M2 money supply. And especially if we go to the year-on-year chart like we have here, we can really see this visualized because global M2 money supply typically trends to the upside. We usually see global central banks printing fiat. It's a great way to solve monetary problems, supposedly. But if we look on a year-on-year chart, not only do we kind of filter out that constant rate of expansion, we can see the acceleration or deceleration in this global M2 money supply. And what we can see during this Bitcoin bull cycle, even though our returns haven't been quite as sky high as they historically have been on a year-on-year basis, we can see that we have typically followed this global M2 money supply. And what we can see, again, over the past few months, this has been very much stagnating, which has, again, coincided with the Bitcoin price action going sideways and even slightly to the downside. We can see that the correlation here is, well, very clear and obvious. What we can do is take things a step further. So if we go into TradingView here, what we can see is, again, just the global M2 money supply. This is the data point you're seeing on your chart now, this blue line. But here we can actually see the correlation percentage between Bitcoin and the global M2 money supply. Now, one slight clarification I'd like to add is I've made this mistake myself, but lots of people kind of interchange global M2 and global liquidity, whereas they are slightly different. If you look on this chart here, we can see this is currently at $103 trillion. And if we go back to here, we can see this aligns with the data that we have on BitcoinMagazinePro.com. But global liquidity is slightly different to just global M2. So if we actually take into account central bank balance sheets, this maybe gives us a better indication of what the true liquidity within global markets is. So on this metric, what I can do is add global liquidity, and we can see the correlation goes from 88.17% to slightly lower, about 72%. So following global M2 money supply actually seems to provide a higher degree of accuracy, some more foresight and certainty of what the Bitcoin price action is likely to do next. So I'm still almost certainly going to make this mistake going forward. If you hear me refer to global liquidity, I'm usually referring to global M2 money supply. But just in case anyone brings this up going forward, there's a little clarification for you. But what we can do, like I said, is if we look at the correlation, 88.17%. Obviously pretty high, but what a lot of people are doing is adding a 70-day offset to this, 10 weeks, almost lag, delay to the data, so then we can almost match up how long it takes for this new expansion in global M2 money supply, I was going to say global liquidity, to actually trickle down and rotate into more risk-on and speculative assets like Bitcoin. And what we can see once we add this offset or this delay, it matches up to the Bitcoin price action incredibly accurately. At least it has been doing for this entire cycle so far. Just again, for some clarification, I've put the length of the correlation calculation to 1,000 days, which if we just zoom out is pretty much the entire length of this Bitcoin bull cycle so far. Where's the right tool? It is this one. We can see 1,000 days is pretty much bang on exactly where we currently are within this Bitcoin bull cycle. But if I just zoom back in here, as we can see, this is obviously very correlated to the Bitcoin price action, but recently we've maybe seen a little bit of a divergence where as Bitcoin has been stagnating, we've seen this rallying to the upside just over the past few months. And now, even though we have seen a bit of a contraction in the acceleration to the upside of the global M2 money supply, resulting in this going a little bit sideways and choppy consolidating over the past few weeks, we can see that this kind of misaligns with the recent Bitcoin price action we've seen and doesn't really coincide with our expectations of how Q4 is likely to play out for BTC. So one thing we can do is look at a number of different liquidity metrics. So one that I really like to look at is the stablecoin supply. Now, if I just remove the delay here, change it to 0, we can see the correlation between the supply of stablecoins within the cryptocurrency market. So think USDT, USDC, DAI, etc., the correlation between that and Bitcoin is 95.41%. However, you do need to take into account that this is similar to the global M2 money supply. It's typically on an uptrend. We can see during bear markets, this is contracting. We are seeing a burning of the stablecoin supply. But what we can do to actually outline the rate of acceleration or deceleration is, again, turn this into a year-on-year correlation basis. And what we can see, this still remains at 94.39%, an incredibly high correlation, higher than that of the global M2 money supply. And we can see, just lining up the Bitcoin price and the stable coin liquidity, this has been aligning pretty much perfectly throughout this bull cycle, especially if we just look to where Bitcoin made this double peak, new all-time highs that aligned perfectly with the year-on-year rate of change in the global stablecoin supply on a year-on-year basis. And another great way to look at the stablecoin supply, rather than just looking at its constant expansion to the upside, is if we just look at the normal stablecoin supply, but look at the rate of change over a quarterly basis and add a 90-day moving average. So this green line you see here is the 90-day rate of change. As again, crypto Bitcoin moves pretty quick. Looking at a year-on-year basis can potentially miss some of the slightly more nuanced and quick moves that we see within the markets, given the fact that we're on a 24/7 basis. Maybe we need to account for the fact that Bitcoin moves a little bit quicker. Now, this red line, as I said, is just a 90-day moving average. But one of the really interesting things is when BTC crosses above this moving average, once we see Bitcoin rate of change, the stablecoin rate of change, cross above this moving average, it typically indicates a very good period of time to be long Bitcoin, to be accumulating and to anticipate some strong price action moves to the upside in the very near term. Now, if I just remove all of those, what we can also see is when we cross beneath this, it's also coincided with the Bitcoin price action having very negative periods of price action. As BTC is potentially stagnating, we typically see less and less stablecoin being printed, which makes sense. There's less dry powder, less interest in the markets. But just as another data point to keep an eye on, rather than just looking at pure metrics such as the stablecoin supply, such as global M2, if we actually look at the rate of change and see if that's accelerating or decelerating above or beneath the moving average, then again, these can give us some pretty accurate signals of what we can expect for the coming weeks and months. This is where I like to look at gold, which has been absolutely tearing up new all-time highs pretty much constantly throughout 2025. And what we can do is if we just turn on gold with a 70-day offset, we can once again see an incredibly strong correlation between the Bitcoin price action and gold. Now, of course, Bitcoin has had this narrative of being a digital gold, a hedge against inflation for a number of years now, but we can see a 92.41% correlation with that 70-day offset, higher than that of the global M2 or global liquidity supply, gives us some indication of potentially what the Bitcoin price action could do next. Now, again, we can look at this on a year-on-year basis. It will slightly diminish that correlation percentage, but we can see just looking at the price action here, it is mimicking this very nicely. But what we can do is take this a step further. So I'll remove the year on year. We want to be as high in correlation percentage as possible. Now, rather than applying a 10-week delay, if we just apply 40 days, somewhere between 5 and 6 weeks, we can see it is only marginal, but the correlation percentage actually increases between gold with a 40-day offset throughout this Bitcoin cycle and the current price action. Now, what we can see is if I just zoom in here and look at the Bitcoin price action of the past few weeks, it's coincided very nicely. We can see as gold was making new all-time highs, Bitcoin was doing the same. And over the past few months, as we've been chopping and consolidating, going sideways, this is aligned perfectly with the gold chart, almost on a day-by-day basis. Now, if we are to continue following this chart, then we could be on the cusp of a major move in the Bitcoin price action. Now, if I just zoom out, and again, it's a bit of a rough science kind of manually aligning where this could take the Bitcoin price action. But if we are to continue following this gold price action, if the correlation is to remain and we are to follow this, hopefully we can see some rotation from gold and traditional markets into Bitcoin, then we could see a Bitcoin price of over $150,000 in early November. And this is under the assumption that gold is probably finished its rally, which, looking at the price action, who knows how high gold could go over the coming days and weeks, especially as silver is continuing to move on a tear to the upside. But one other thing we can do is if we just look at the US dollar strength index. This gives us a slightly different view into what Bitcoin could be doing next. If I just go onto this chart here, this is BTC versus the DXY, the US dollar strength index. Now, rather than looking at things which have a positive correlation to Bitcoin, such as the stablecoin supply, global liquidity, or gold, if we look at the US dollar strength index, we can see very clear and obvious inverse correlation parallels. We can see as the US dollar strength index is moving to the downside, Bitcoin is usually moving up. And as Bitcoin is in bear cycles, it's usually as the US dollar strength index is rallying hard to the upside. Now, over the past few weeks, we have actually seen, well, past few months really, throughout most of 2025, we've seen this very rapidly decreasing. But if we just zoom in over the past few weeks, we have actually seen this bounce. Now, this is pretty normal. It's rare to see a trend just last indefinitely without any just relief bounces. So I don't think that this is something that we need to really worry on too much, that the fact that we're seeing the US dollar strength index bounce. But if we look on a year-on-year basis, it does look a little bit more severe. We can see that if we just add on a box around here, which is where the US dollar strength index usually bounces from on a year-on-year basis, then this could be signifying that BTC could be about to experience a little bit more chop and consolidation. And as this is very much tied to the global liquidity supply, global M2 money supply, we can see that as the US dollar strength index is increasing, it typically aligns with investors maybe being a little bit less speculative, a little bit less risk on. So what we can do is if I just go back to TradingView and change this to the US dollar strength index, and again, I'll change this offset to 70 days. Around this 10-week seems to be a pretty good indication. Now, what we can see is the correlation isn't that high. Well, in fact, it's negative. As I said, it's an inverse correlation. So really, if this was minus 100%, it would signify a perfect inverse correlation to the BTC price action. But what I can do is, again, change this to a year-on-year basis. And again, throughout this entire Bitcoin cycle, we've seen an inverse correlation between Bitcoin and the US dollar strength index on a year-on-year basis at a fairly strong minus 41%. Now, if I just invert this scale, what we can see over the past few months, this has been pretty accurate for what Bitcoin has been doing. If I just try and line these up around here, again, as I said, it's not an exact science, we can see as Bitcoin has been declining, it's coincided almost perfectly with the US dollar strength index inverted on a year-on-year basis, bit of a mouthful, also declining. And even as Bitcoin was having this period of chopping consolidation throughout most of last year, we saw the same. As Bitcoin rallied recently to new all-time highs, very much similar price action in the inverse US dollar strength and Bitcoin price action. And now we're actually seeing this massively declining. So we are seeing slightly conflicting signals with stablecoin supply, global M2 money supply / liquidity, and the US dollar strength index potentially now pointing to some downwards price action for BTC. So just to summarize, Bitcoin has been most closely following gold with a 40-day offset this cycle with a correlation percentage of over 92%. And this also points towards BTC being on the cusp of an explosive move to the upside in the very near future. And when we also check on liquidity metrics such as the global M2 money supply and the rate of stablecoin expansion, we're seeing confluence for significant capital rotation into Bitcoin, which coincides with what we're kind of expecting due to Bitcoin seasonality of a very strong Q4 and end of 2025. However, we are seeing some contrasting signals, albeit not as historically influential or highly correlated. We could see an inverse correlation between that year-on-year US dollar strength index on Bitcoin of around minus 40%, so not quite as influential, but it would be good if we could see a little bit more confluence given the fact that that is actually trending to the downside and signifying that Bitcoin could struggle over the coming days, weeks, and potentially months or so. So even though lots of signs are pointing to the upside, be prepared for a little bit more chop than feels really acceptable. Bitcoin this cycle has been very much chopping and consolidating for what feels like an age before these big explosive moves. So let me know your thoughts in the comments below and on social media. I look forward to reading and replying to them. Make sure to check out all the resources we discussed today on bitcoinmagazinepro.com, your #1 source for Bitcoin analysis. And if anyone is in Singapore, I'm not here for Token 2049, but if you are here for the F1 like myself, or just here on holiday, if you live here, whatever, then let me know. I'd love to meet up and potentially talk about Bitcoin and whatever else you're interested in. Thank you all very much for watching, and I'll see you in the next one.